Hello, welcome to News Centre. I'm Parikshit Luthra. The Federation of Indian Chambers of Commerce and Industry's latest survey on manufacturing in India shows that the sector has witnessed continued growth in the last two quarters of FY24. For the fourth quarter of the fiscal, nearly 87% of respondents expect either more or same level of production against 73% last quarter. Similarly, 85% of respondents anticipate higher number of orders compared to the previous quarter. However, industry participants still see major constraints relating to availability of raw materials, uncertainty in global demand, and shortage of skilled labour, among others, affecting expansion plans. To take this discussion forward, I'm now joined by Anant Goenka, Vice President at the Federation of Indian Chambers of Commerce and Industry. He's also the Vice Chairman at the RPG Group. And we will also be joined by Manish Sharma, Chair of Electronics and White Goods Committee at FICCI, also the Chairman of Panasonic Life Solutions India and South Asia. Thank you very much for joining us, Anant. Let me begin by asking you, 87% respondents in your survey for Q4 expect higher or same level of production. But when it comes to growth prospects, out of the 10 sectors surveyed, most of the sectors are throwing up moderate growth in Q4, barring electronics and machine tools. What, according to you, could be some of the reasons? And will moderate growth will also be the outlook for the coming few quarters?
Right. So I think, as you've elaborated very clearly, I think electronics is one segment that is seeing continuous very high levels of growth. You have players around the world coming in and investing. India is becoming the China +1 location for this sector. So clearly there is great upside, and similarly for machine tools as well. With more and more manufacturing coming into India, machine tools is also seeing positivity. I'd say from a private sector point of view, we are seeing continuous positive growth, but again, it is fairly stable to positive, and therefore I'd say I would, at a gut level, agree with the moderate kind of growth that we are seeing. We have interviewed about 400 plus units, which covers about 3.5 lakh crore worth of revenues. And I'd say that what we are seeing on the ground is matching fairly well with the numbers that have come out from the survey.
Right. What would be your outlook on the auto sector, especially as CEAT is also under the RPG Group? Let me ask you about the auto sector in general. According to the survey, this sector is also looking at moderate growth in this quarter. What are some of the constraints do you see? And do you feel that after almost 2 years of very strong and robust growth, are we going to see a moderation in FY25?
Right. So I'd say each sector in the auto, each category in the auto sector is nearly like a separate industry. Two-wheelers gets mostly affected by rural demand. We have seen a slump in two-wheeler demand over the last, say, longer-term 5-year period. We are now going back to above 2000, say, 17, 18 kind of levels after quite some time. Rural demand is showing positive upturn, I'd say, from June 2023 onwards. So to that extent, the pain that was there is looking to be better. And so I'm more optimistic about the two-wheeler sector. On the CV side, we've seen high growth over the last, say, 1.5 to 2 years' time. So on a high base, I would say going forward, we should see just kind of moderate growth. But again, that's on a high base. And the passenger segment has seen continuous growth, big shift towards premiumization. You're seeing budget cars nearly getting phased out or much slower growth there. SUVs seeing far better growth on the passenger side. We're seeing the chip shortage that we were talking about a year ago has reduced substantially. So I'm optimistic about the passenger space of car and SUV space as well. So that's my larger view on the auto sector. I think everyone is hoping and moving towards more localization. We do need some more skilled workforce, and the infra work in the country needs to continue as the government is doing so. And that will further see more upliftment on the passenger space.
Right. Manish, if I can come to you, 62% of the respondents in the latest survey said that there is no issue with workforce availability. Remaining 38% feel there is a lack of skilled workforce. Could you outline for us what would be some of the key sectors where you are seeing a shortage of workforce and shortage of skilled workforce is being felt?
So a couple of things, actually. I'll just add to a few more perspectives on the opportunity itself of what we are looking at. Uh, One perspective is that on a scale of $100 billion of domestic electronic manufacturing, which has happened in the year gone by, we are looking at taking this up to $425 billion by 2030. And the intermediary here would be FY26, where we are looking at taking this up to $300 billion. Now, the key story here is not the magnitude itself of what we are wanting to do, but the logical rub off what it will create in terms of backward integration and also employment. I'll come to the skills in a while. Uh, on $100 billion of manufacturing, which happened last year, the domestic value addition was just about 23 to 24%. So essentially, we are looking at $24 billion of domestic sourcing in the total scale of manufacturing, which happened in the electronics sector in the country. And by 2030, the industry's expectation is to take this up to 45% of domestic value addition to happen in the country on a magnitude of $425 billion. This essentially means from a $25 billion, we are wanting domestic sourcing, which essentially is about component manufacturing, to move up to $175 billion. That is the scale which we are looking at in the time to come. Now, when it comes to skills, variety of things. And let me bring one more perspective here. I think as an offshoot of the recent policies, air conditioners happens to be one of the industry which generates employment at large, essentially because in the entire value chain, starting from, say, design to manufacturing to installations, we need a lot of engineers to install and subsequently maintain those products. So air conditioners happens to be one of the largest employment generation per product which is being produced or proposed. And I would like to very happily share one of the data points which we recently validated. In the backdrop of the PLI, which was announced, this is one category where the industry is really leading from the front. And of the total 6,700 crores of PLI incentive which was allocated, I have some figures available with me. The projections by end of last calendar year were that investment should have exceeded 2,326 crores. I'm very happy to share with you that investments already have exceeded 2,721 crores, and employment generation, which was supposed to be 31,000 people in this very labor-intensive industry in the overall value chain, we have exceeded 41,000 people. So essentially, currently, the industry is dealing, especially electronics, and dealing with those situations. Yes.
Right. Manish, I would also like to ask you, when it comes to further growth of the electronics sector, electronics manufacturing and localization, what are some of the interventions that you need from the government side?
Yeah, to be honest, I mean, if I look back in the decade gone by, of course, when you look back in the time, you can always challenge your decisions or appreciate them. But it appears that there has been a methodical approach where, say, towards 2014-15 came incentives or policies like MSIPs, which were essentially capex oriented incentives, and subsequently came PLIs, especially to enable backward integration, because that is the objective, as you rightly mentioned. And in order to drive backward integration, currently there are two enablers. One is, of course, the PLI, and second is the incentives which help invest into components which we call them as specs, which is specific to electronic components, including semiconductors. So to be honest, on the supply side, much of the measures have been taken. And from here on, industry expects two things. One is the expansion of demand in line with the estimation. And to enable that, industry will take an initiative to kind of aggregate the demand, which essentially electronics industry is taking a cue out of automotive industry, which it would have done in the recent past.
Right. Anant Goenka, returning to you, as per the FICCI survey for Q4, production cost has risen for 67% of your respondents when you compare it to Q3 of FY24. According to you, which are some of the sectors which could see a price rise because of raw material pressures, supply disruptions?
Right. So the raw material price increase we have seen has been only marginal. We are not seeing across the board a very large shift in commodity prices, maybe about a couple of percentage points. A lot of it is crude based, but even crude has seen a slowdown, say, if I recollect right, sometime by November, December, which will have a positive impact going forward into Q1 as well. So there was a little bit of a blip that we are seeing in Q4, but I think things should get better going forward.
Right. Manish Sharma, in terms of manufacturing, give us a sense of the cost pressures right now.
Yeah, so I would say that cost pressures have kind of stabilized because supply side is becoming more predictable. And if you look at 2 to 3 years gone by, specifically in the backdrop of the pandemic and the subsequent challenges which came on the supply side, availability of components, Anant touched upon the shortage of chips, being a matter of history now. Commodities are kind of stabilizing. And I believe that cost pressures, while are going to remain forever in the competitive environment, but I think the bigger challenge with the industry is to improve the dependence of sourcing which happens within the country. And here we have to take responsible steps because the current disabilities of the challenges of supply chain from getting material from elsewhere are not necessarily specific to costs. But I think it is also about de-risking the supply chains for a brighter future. So in that sense, cost pressures, I believe, are a matter of past and will obviously always remain. But I think the bigger challenge is to take steps to enable backward integration, which essentially means component manufacturing to happen in our country.
Right. My final question to Anant Goenka. For the coming fiscal, what are some of the growth challenges that you see for the Indian economy, the Indian manufacturing sector? What will be some of the big hurdles to growth according to you?
Right. I think Manish did touch upon the supply chain disruption part. I think we are continuing to see geopolitical disruptions that are happening around the world. There is no clear end in sight for the various wars also that are happening. With that, I think the entire aspect of shipping lanes, we are seeing the Red Sea issues happening. I think that is the here and now issue of uncertainty, freight rates impact that we are going to see. And as a result of that, commodity price uncertainty that may arise. To me, these are the 3 or 4 elements of change. US has seen very high growth in the last 2 years, which was fairly unexpected. How will that turn out is another question mark. And will China see some growth going forward, maybe in the latter half of this year? And what impact that will have on commodity prices is also something that's on the back of our mind. So these are the few things that are on my mind for the coming year.
All right. Anant Goenka, Manish Sharma, thank you very much for joining us with the highlights of the FICCI Manufacturing Survey and what could be some of the hurdles to growth and the interventions from government that would be needed in the coming months. We're taking a short break here, but don't go anywhere. The Lord Mayor of London, Michael Mainelli, is in India to hold talks with business leaders. He joins us for an interaction when we are back.